If I only knew in the spring of 2007 that it was not time to buy property, I wouldn't have bought that condo. If I only knew that the housing market was just about to collapse and that 4 years later I would lose that property. If I only knew. If I only knew in the fall of 2018 that the crypto market was at the bottom, I would have bought the crap out of everything in that market and profited wildly over the next year and a half. If I only knew in May of 2021 that the crypto market was at the top, I would have taken massive profits instead of watching my portfolio drop by about 90%. If I only knew. And in each one of those circumstances, when I have the thought, if I only knew, the thing that I wish I would have known was what that particular asset or asset class was getting ready to do. But in actuality, that is not the information that I was missing. Ecclesiastes chapter 3 verse 1 says, "To everything there's a season, a time for every purpose under heaven, a time to be born, a time to die, a time to plant, and a time to pluck what is planted." Genesis 8:22 says, "While the earth remains, seed time and harvest, cold and heat, winter and summer, and day and night shall not cease." What are these scriptures talking about? They're talking about the fact that everything on earth moves in seasons or cycles. And the knowledge that I was actually missing was not the knowledge of how one particular asset class was going to perform at a particular moment. The actual knowledge I was missing was the knowledge of how the market cycle works. And I'm going to give you in this video a simple key for understanding the market cycle so that you never again have to say, "If I only knew." Welcome to the Crypto Sphere. This is Cryptogenic coming at you. Today is Tuesday, November 1st at 7:53 a.m. here in Northern California. And we are talking about market cycles. We are talking about seasons. Now, in ancient Israel, this was an agrarian society. This was a society in which the farmer had to understand the season. And because the farmers understood the seasons, they knew that the fall was not the time to plant. The spring was the time to plant. They also knew that when the summer came, they knew when the crops were at the top of the harvest, and they knew not to wait past that moment to bring in the harvest. They knew when to sow, and they knew when to reap. And because they knew when to sow and they knew when to reap, they profited maximally. The skilled farmer profited maximally from the changing seasons. Now, as an investor, you and I can learn how to profit maximally from the changing seasons by understanding the market cycle. And when we understand the market cycle, we understand that it's more than just multiple asset classes that move independently of one another in arbitrary directions. The market is not arbitrary. There are seasons and cycles for the market as a whole, and every asset class in the market functions within these cycles. Now, I'm going to give you a very clear and very simple key to understand this. This is foundational. And this is like the most simplistic way I can think of to explain how the economy works. There are two basic categories of value. And these two basic categories of value in our economy, the world economy, they function inversely. They have inverse effects on one another. When one goes up, the other goes down. And when the other goes up, the other goes down. And they go back and forth. So it's like this seesaw or a teeter-totter where one goes up, the other goes down, one goes up, the other goes down, one goes up, the other goes down, one goes up, the other goes down. But at the fulcrum of that exchange, energy is exerted that moves the economy forward. It's kind of like one of those, what do they call them? One of those carts they use on the railroad tracks. Have you seen those? That's what it's like. Now, these two basic categories of value, in the one hand, you've got cash. currency. In the United States, that's the US dollar. In the other hand, you've got assets. Assets include things like stocks and securities, crypto, digital assets, real estate, precious metals, fine art, automobiles. There's all kinds of assets, asset classes. And the concept is assets are what you exchange your cash for because you believe that they're going to be of greater value. Now, there are maximalists on either side. Cash maximalists say cash is king. It's always better to have cash than assets. And then in every asset class, there are maximalists that say, no, Bitcoin is king. It's always better to have Bitcoin than cash, or automobiles, or fine arts, or stocks, or oil, or whatever it is. And the fact of the matter is, both are wrong. There's a cycle. And in the cycle, the value of cash goes up and assets come down. And then the value of cash comes down and assets go up. And so the way wealth is accumulated is through a process of arbitrage in which when cash is low and assets are high, people exchange their assets for cash. And then cash comes up and assets go down and people exchange their cash for assets. The problem is when cash is at the top and assets are at the bottom and you're selling your assets down here. And when assets are at the top and cash is at the bottom and you're buying assets up here. So you don't buy assets at the top and you don't buy cash at the top. You got to wait for cash to go low and then you buy cash with your assets. You wait for assets to go low and then you buy assets with your cash. And really, that's really what you're doing. In that exchange, you're buying cash. Matter of fact, all a bank is a cash store. Banks sell cash and what they charge you interest. That's what interest is the price that you pay to acquire cash. They literally sell US dollars. Now, let's take a look at this chart so we can see what I'm talking about. This is the US dollar currency index. That's this chart here. Overlaid on the Dow Jones Industrial. You've got the US dollar index on the bottom, and you've got the Dow Jones Industrial. The Dow Jones Industrial, I'm just using this to represent the entire stock market. If I were to overlay the NASDAQ, S&P 500, you'd see that they all move in basically the same direction. And even if I were to throw Bitcoin on here and the crypto market as a whole, it follows the stock market. But the concept is, you notice, let's see, when cash goes down, assets go up. And then cash goes up. Oops. And assets come down. So we can see from this simple chart that the time to buy cash is at the top. So at the top is the time when you start exchanging your assets for cash, when cash is at the bottom. And when cash is at the top, you start exchanging your cash for assets, right? This is the simple arbitrage strategy for wealth accumulation. Next level. So the question is, what drives this whole system? What makes the value of cash go up? And what makes the value of cash come down? Does it just happen naturally? No, it doesn't happen naturally. The answer to the question, what makes the value of cash go up and what makes the value of cash go down, is the Fed. The Fed sees that the value of cash is too low, which means that really when the value of cash is low, that's called inflation. The value of cash has dropped to the extent that goods and services become way too expensive. That's what inflation is. Inflation is when the value of cash is too low and the value of assets are too high. When the value of assets are too high, it's not just assets, it's also commodities and things that you need to buy, like food and groceries and goods and services. When the value of cash is too low and the value of assets are too high, goods and services become too expensive and people can't afford them. That's inflation. That's the definition of inflation. So the Fed says what we need to do is pump the value of cash. We need to increase the value of cash and decrease the value of assets, and that will make life more affordable for the common person. So what do? They raise interest rates. Raising interest rates is by definition the means by which the value of cash, the value of US dollars, is increased. So every time the Fed raises interest rates, the value of cash increases. And every time the Fed raises interest rates, the value of assets decreases by very definition, meaning you cannot increase the value of cash without simultaneously decreasing the value of assets. Assets and cash cannot increase in value at the same time, by very definition. If you increase the value of cash, you decrease the value of assets. That's how interconnected this whole system is. Which means you see where I'm going here? Every time the Fed raises interest rates, the value of cash increases, the value of assets decreases. Which means early this year, when the Fed started raising interest rates, we naturally should have expected the value of assets to decrease. So now here we are on November 1st, and we've got this little breakout happening in some of the crypto assets. I mean, look at Theta token. It was below this line since really going all the way back here to August 18th. It's been below this line of resistance, and it broke out above that line of resistance. And look, and it's come to retest this line of resistance here. And you're asking the question, is this the breakout? Is it just going to break out and explode? T-Fuel has done the same thing. Look at that. Right, I posted this chart to my Patreon early last week, expecting a break above this line would take us up to this line. And we came and almost tested that line, right? And now the RSI's had to calm down and we'll probably have another run at it. How far can we expect this to go? Even if we look at Bitcoin on the daily, there's been like this cup pattern where it's come down and it's come up and it's trying to establish support at this line so that it can bounce and move up towards 22,000. And is this it? Is it going to break out? Is it going to move forward? What can we expect? Well, there's an important date to remember, and that date is November 11th. What's happening on November 11th? On November 11th, the Fed meets again, and the Fed is expected on November 11th to raise interest rates. Raising interest rates necessarily increases the value of the US dollar. It increases the value of cash, which means what I expect on November 11th, this day here, is for the value of the US dollar to break bullish out of this falling wedge. And a falling wedge is simply a wind up for a bullish break. We've been making this little falling wedge here, which you say, well, we've broken bearish out of this trend here. Yes. But we're forming this little falling wedge. It's just a wind up for another push up. The US dollar is not done reaching for higher heights. There's going to be at least 3 more rounds, or at least 2 more rounds of interest rate raises, probably 3. I expect one here on November 11th, another one probably in February, and then the last one probably around April. I think they want to get interest rates up to about 5%. And that should put a dent in inflation. Why does that put a dent in inflation? Because it increases the value of the US dollar, which means that people who lend US dollars can make more money in interest, which makes it more valuable to hold US dollars than it does to hold assets. And the US dollar is going to press toward this top line again, I believe. I think we have the capacity between now and April to touch this top line again. And what will that do? Well, that means for the time being, we should see another breakdown here and maybe even make a lower low. This is the DJI. This is assets. You see how we've been making lower highs? I think we're going to come down and make one more lower low, at least. And then another lower high, who knows? Why do I think this? Because this is just the basic market cycle. This is how the market cycle works. What does this mean for Bitcoin? Well, if we take a look at Bitcoin, Bitcoin has just been moving sideways in this range. I think we're going to continue moving sideways in this range. We might get little breakouts. Hopefully we break back up above this line. I don't think the whole market's going to tank. But I think between now and August, yes, there will be volatility, but the asset market is going to move sideways to slightly downward, while the US dollar continues to move upward. Now, that's just the season. That's not bad news. That's just the season. It's like saying in the spring, telling a farmer, yeah, you're probably not going to get many crops growing in the spring. And the farmer says, of course you don't get crops growing in the spring. That's the time to sow, not the time to harvest. The problem is, as investors, we want every season to be harvest season, and we don't realize that the sowing season is called accumulation, meaning between now and somewhere around April of next year, I see this as an accumulation opportunity of a lifetime. Look at this. From June of 2022 to April of 2023, I'm expecting an accumulation opportunity of a lifetime. That's what I see this whole season as. Could I be wrong? Of course I could be wrong. This is not financial advice. I'm not a financial advisor. I'm simply saying I don't want to look back on this season and say the same thing that I said about the fall of 2018, about the spring of 2007, if I only knew. I want to look back on this season and say, I used the sowing season for what it was designed for. To sow. To accumulate. You sow during the spring. You reap during the summer. And if I understand the market cycle, what is just very clear with the market cycle is that as money gets more and more expensive and assets become less and less expensive, that's the time to start shifting my money to assets. Not all of a sudden, not in one fell swoop, not dropping in my whole life savings in a single day, but because we have this extended accumulation opportunity, that's when I start dollar cost averaging into assets over an extended period of time. And with that in mind, if that is the case, then the next 6 months can change your life. What you sow in the next 6 months can bring about a harvest that could change your life. And not even just in crypto. But I think at a certain point, the stock market's going to turn around and explode as well. I think we're going to see one more explosion in the housing market as well. I think the value of assets are going to increase. The value of assets are going to increase. It's going to take about 6 months, 6 to 9 months before the value of cash starts to retract again. But once that happens, whenever that happens, the value of assets is going to go on another tear. It's going to move upward. And those who have sown in this season are going to have a harvest to reap. And the next crisis will be determining when it's actually time to start reaping. And thankfully, that's easier to discern. It's easier to discern the top than it is the bottom. I mean, the top presents itself It's pretty easy to see when you're looking at a chart. And so I'll do another video to tell you how to discern the top. All right, hope this has helped you. Thank you so much for watching to the very end. Do me a favor, if you haven't done so already, to hit the like button on this video if you'd appreciate this content. Leave me a comment letting me know what you think. Subscribe to this channel and check out my Patreon if you're interested. I provide a lot of resources and charts there, members-only videos, etc. But above all, make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.